Good morning traders, and welcome to this Orbex market analysis update where we will be looking at the FX crosses focusing on GBP CAD and GBP CHF. So trading outside of the US dollar can offer good returns for traders and is a great way to diversify risk. However, it is worth noting that volatility in these pairs can often be greater than it is in the FX majors due to lower liquidity, so please always bear in mind. And traders also need to be aware of the specific factors influencing price action in these pairs away from the US dollar. So with the pound against the Canadian dollar, then we're looking at fundamentals in the Great British Pound versus the Canadian dollar. And with GBP, the key driver over recent months has of course been Brexit negotiations, which have been weighing on the pound. However, due to the decline in the US dollar over the last week, we've seen a recovery in the British pound, which has allowed the pound to rise against the Canadian dollar, as it remains slightly weaker due to lower oil prices. So with oil being Canada's main export, the price of oil tends to have a big impact on CAD, and we typically see the Canadian dollar rising as oil prices strengthen, and the Canadian dollar Canadian dollar rising as oil prices strengthen, the Canadian dollar falling as oil prices weaken. So when trading the Canadian dollar or Canadian dollar pairs, it is worth keeping an eye on oil prices. Looking ahead today then, traders are waiting on the Bank of England May meeting, which is due, and given the ongoing uncertainty with Brexit, the BOE is likely to reiterate its message of needing to keep rates on hold while it assesses the likely outcome of Brexit negotiations, and this should keep the British pound pressured. With GBP against the Swiss franc then, it's also looking interesting at the moment. Swiss franc remains subdued currently, given the SNB continuing to reaffirm its commitment to maintaining an easing presence due to the ongoing threat from trade wars and other geopolitical events. However, this dynamic is of course subject to change, and given the prospect now for a US-China trade deal, which could happen in the coming weeks, this could take some pressure off the SNB. For now though, with the British pound rising, GBPCHF looks vulnerable to higher prices. So let's take a look at some technical levels now then, and please remember that opinions shared here do not constitute investment advice, and when trading, losses can exceed profits. Okay, so starting with GBP CAD then on the daily time frame, and you can see that price has recently broken above this 175.24 resistance level formed at the December and January highs. So while we're above this level, a run-up, we're likely to see a run-up to test the next key structural level around that 177.75 level, where we have a raft of prior highs. So you can see that price action in this pair has been quite stifled over recent months. After testing the 177.75 level, you can see that price reversed, and we've been stifled in this range between 173.22 and 175.24. So we're currently sitting above that level, and as I say, while price remains above here, we're likely to see a run up to test the next structural level up here at 177.75. And you can also see that this level could be viewed as the neckline for an inverted head and shoulders pattern. So we have the left shoulder, the head down here, and then the right shoulder here. So if we do get a break above that 177.75 level, this could spell a much larger bullish move in the pound against the Canadian dollar. So it's worth keeping an eye on that level as we proceed. Dropping down onto the H4 time frame then, and this chart shows much more clearly the stagnation that we've seen over recent months in terms of price action being pinned in against this 173.22 level. And again, we're currently trading above 175.24 here. So while we do remain above this level, we are likely to see a run up to test the higher level, although it is worth noting that we are seeing some bearish divergence coming up on the RSI indicator here, so we are also vulnerable to a further rotation lower as this range play continues to trade out. Moving on to the pound Swiss then, and you can see it's kind of a similar story recently, We've broken above the 132.68 level, which was the local resistance here. However, we are as yet still within the bearish trend line from last year's highs. So you can see that we recently tested that in March, and we're currently on course to test that again while we remain above this 132.68 level. So while above here, focus then on a run up to test that bearish trend line, and above there we have the 134.28 level, which if broken again will signal a much larger move in the pound against the Swiss franc. Dropping down onto the H4 time frames then, and you can see that unlike with the pound against the Canadian dollar, momentum on the lower time frames is actually supportive of continued upsides. You can see that we aren't flagging up any divergence yet, so there is likely to be one more drive higher. However, it will be interesting to note if we see any bearish RSI divergence as we test the bearish trend line, or indeed as we test this upper resistance level, because of course if we do start to see some bearish divergence showing up on the RSI indicator, then we could be in for a rotation lower, and we aren't really seeing any decent support until we get down until the low 129, so around 129.50. Okay, so these are the levels I'm looking at then in the pound against the Canadian dollar and the pound against the Swiss franc. So please stay tuned into the blog over the remainder of the week, where we'll be keeping you updated on any key developments such as the Bank of England meeting later today and any other important trading developments. Doing our best, as always, to serve traders responsibly. Thanks a lot for tuning in today, and have a great day, everyone. Good luck with your trading. Thank you.